Okay. So what is the cost of investing in stocks? Right. So the cost of investing in stock can be divided into three major types: explicit, implicit, and hidden. Let's take up. Let's try and understand all of these one by one. So explicit cost is that cost which is visible on the face, you can say. Okay, which is there at that very moment, the time when I'm making the investment. Okay, I can see that. I can uh, look at the money which is going out of my pocket towards that very cost. Okay, so this is the cost which I'll be able to check while making the investments. So two types: brokerage commission, cost and fees, and then custody or annual fees. So custody or annual fees is, that is, I have opened an account with a broker, so that broker will be giving me services for safekeeping of my stocks in their account, right, in their digital locker. So, or whatever services that broker is providing to me in terms of making investments, or providing any investment opportunities to me. So in that case, the broker will be charging a sort of a annual fee for annual maintenance of my account, right? So that is called custody fee or annual fee. So brokerage and commission, right? Brokerage and commission is something which we have to bear while making the investments. Right? So the brokerage commission, it falls at a very low range, 10 paisa, 20 paisa, 30 paisa, 50 paisa, like that. So for every 100 rupee invested, let's say if the brokerage commission is 20 paisa, so you are required to pay 20 paisa for every for every 100 rupee invested. Okay. So now in this case, let's suppose if you have invested 1,000 rupees in some stock, and the commission is 20 paisa, then in that case you will be paying for every 100 rupee it is 20 paisa, so you will be paying hardly 2 rupees over 1,000 rupees of investment. Okay, so explicit cost is the brokerage or commission cost and fee. These are levied by the broker because they are providing you some sort of services, right? And that is the only medium for the brokers to generate revenue for themselves, because they are simple facilitators, middlemen, right? So you can consider it as a middleman fees. So whatever buying and selling of the stocks you will be doing, the broker will be getting commission over that. So just read this example, you will be able to understand it better. All right. Simple example. So in Indian market, we have anywhere between 10 paisa to 35 paisa brokerage commission. 30 paisa is considered a high commission. Mind that. Now, custody or annual fee is the annual charges. For example, let's suppose you are using a credit card. So for that credit card, again, the bank will charge certain fees, let's say 250 rupees or maybe 750 rupees on annual basis, because you are using those services. Okay, so the higher the facilities, higher the features available in that credit card, the higher will be the charges of that credit card. Exactly like that, the higher the services you will be taking from the broker, the higher will be the annual fees for getting all of those services. So brokerage is the on-spot service. The custody or annual fee is the complete year services provided by the broker. It is majorly directed towards the custody of the you can say securities which are there in the account, in your account, and your account is being maintained by the broker. So the broker is the safekeeper and is ultimately charging for such sort of annual services. Read this, please. All right. Now, implicit cost. Implicit costs are costs which are not visible on the face, but are still there. And you have to ultimately pay them. Okay. So these will not be the direct costs, which are which will not be faced by you, which will not be borne by you at the time of making the investment or taking out your money. But yes, these will be faced by you as an expense in the longer term. Okay. So these are majorly related to the taxes which we are going to pay. All right. So let's take them one by one. So capital gains tax is the one. Majorly it is because of taxation only, the implicit cost. So whatever amount of money, extra money, that is the profit you are going to generate over your investments, you are required to pay tax to the government for that. That since you have made some money, please, since we are the authority here, so share it with us as well and contribute it for the overall development of the economy, so that the better the economy grows because of your contribution, the better will your returns be in future. That is the point here. So taxes, capital gains tax, right? Then we have short-term capital and long-term capital. Okay. So short-term and long-term is defined on the basis of the time period of investment. So let's say if you are investing into stocks, okay, maybe directly or indirectly. By indirectly, I mean that through mutual funds. Ultimately, through equity mutual funds, you are again investing in stocks only. Okay. So that is the indirect mode of investment. You can say that you are not putting your money directly into the stock market. You're simply doing it through the medium of mutual funds. So now the short-term criteria, that is to identify that whether this investment is a short-term or a long-term investment. So the time frame for that is 1 year time period in case of equity investments. Mind that. In case of debt, it is 3 years time period. So if you have, let's suppose, invested in a stock and you're selling that stock before within 1 year time period, then in that case it will be considered a short-term capital gain, provided you are making a gain. Okay. Now, and if it is more than 1 year time period, then that tax is called long-term capital gains tax, LTCG, right? Dividends, again, since these are again a sort of income for us. So in India, you have to pay tax over dividends, but there is a limit attached to that. So 10 lakh rupees is the limit for dividends. Dividends are actually already, whatever dividends we are going to receive in our hands, these are already, tax is already paid by the company on behalf of you. That is the case, which is why we say that dividends which are received in the hands of the individuals in India, okay, the dividends are tax free for the individuals. And that too, again, the limit is also very high with regard to further taxation. So if you are able to earn 10 lakh rupees of dividends in a particular year, then only over and above that, whatever amount of money, you will be charged 10%, right? So that's a huge amount of money for earning dividends. So that is why we say ultimately dividends are tax free for people here. But in some countries, there are policies, taxation policy rules, that the dividends are not tax free and you have to pay taxation over that. Hidden costs are the costs that are not visible on the face, right? These are not included in implicit, neither in explicit. These are there, which comes as a surprise to you. Okay, that word can be used with respect to them. So account transfer fee. Let's say you are transferring your account from one. You can say one asset is moving from one account to another account. Okay, so the transfer charges will be there. Then whatever account you are maintaining, that account maintenance fee will be there. Let's suppose how much tax to be paid annually in capital gain. Okay, see, in case of equity, it is 10%, but there is a calculation behind that. So once when I will be explaining the mutual funds, there I will give you a detailed explanation of that. Okay, with calculation. It will be too early for you to know that calculation, because first of all, you need to understand about all of the types of equity investments, right? So for the time being, just consider that it is 10% over the capital gain in case of equity. Now, inactivity fee is also there. That is, if you are not using your account, so some of the brokers or some of the institutions will start charging fee, because even though you are not making any sort of investment, but still the account is being maintained by that particular, you can say, the entity, and because of that, the organization will start charging you over the inactivity fee. Then there is minimum balance fee. That is a particular amount of money needs to be kept in your account. For example, SBI in bank, if I say SBI bank, it asks people that you should have at least 5,000 rupees in your account if your overall balance, average balance, will be less than 5,000 rupees at the time of jumping from 1 month to another month, then there will be deduction. In case of HDFC, it is 10,000 rupees for savings account. Because that is quite a high amount of money. Mind that. Then interest on margin loans. So margin loans are wherein one person will be buying securities on margin, on leverage basis. So let's say you have borrowed money from a broker, and now let's say you have 10,000 rupees and you want to trade for 1 lakh rupees. So the broker is giving you a leverage of 1:10. So by putting 10,000 rupees with the broker, you can invest 1 lakh rupees in the market. Okay, in the futures market, options market. So there, the whatever margin or whatever you can say a loan is given by the broker, that is that 90,000 rupees, over that amount of money, the broker will be charging you a certain interest. Then sales charges or loads, that is whatever sales you will be doing, that is whatever securities you have purchased, now you'll be selling them to get some sort of profits. So there will be loading over that. Okay.